everyone, my name is Dr David O.Akindoyin, the privileged navigator of ZERUBABEL Consult that specializes in building services engineering, fire and life safety system. I'm also the CEO of ZERUBABEL Empowerment Foundation. Briefly today, we'll be looking at a very vital topic for businessmen, tagged profit margin. You may ask, what is profit margin and how to calculate it? Well, profit margin is a percentage of revenue that is left in your business after carrying out any form of sales, activities, or you render services. There are three types of profit margin. Number one is gross profit margin. Number two is operating profit margin, and number three, net profit margin. Number one, what is gross profit margin? Gross profit margin can be calculated by subtracting your revenue from consumables. Your revenue is how much client pays you on a particular project. Your consumables, we as consultants, for example, we pay for software, annual subscriptions, utilities like electricity, waste, we repair computers, telecom, etc. For example, or instance, if your revenue is 2 million naira and your consumable is 1 million naira, then your gross profit margin is 1 million naira. Number two is operating profit margin. What is operating profit margin? Operating profit margin is gross profit margin minus your current expenditure overhead, like payment of staff. You are now left with another figure after removing your expenses from gross profit margin. For example, as stated earlier, if your gross profit margin is 1 million naira and your recurrent expenditure like payment of staff is 500,000 naira, the remaining amount is 500,000 naira. That is, the operating profit margin is 500,000 naira. Number three is net profit margin. What is net profit margin? It is the subtraction of the operating profit margin from the loans you have incurred and the interest on the loans, the value added tax and withholding tax. For example, as stated earlier, if your operating profit margin is 500,000 naira and the loans and the taxes that you are paid to government is 200,000 naira, then if you subtract the operating profit margin from the taxes and the loans, that will be 300,000 naira. So your net profit margin is 300,000 naira, and that is actually the real profit on the services you have rendered on any project you have embarked upon. Net profit margin can be easily calculated right from your income statement. That is why it is highly imperative to prepare financial statement account. You can be making revenue of 500 million naira and not be making any profits. People might call you millionaire or multi-millionaire. You actually need in reality. The only way you will know is through your financial statement. Net profit margin is the only way to know if your business is doing well or not. If you go to financial institution to borrow money, one of the things they will check is the net profit margin. They will also check your expenses from your net profit. It is the percentage of what is left that determines your worth. For example, if you make 12 million naira net profit per annum, all your personal expenses shouldn't go beyond 50% of that 12 million naira, while you save the remaining 50%. The problem of most African countries, Nigeria as an example, is that our recurrent expenditure is more than capital expenditure. What do you want? You can ask. You can only answer that question yourself. Stay tuned to the next episode of Archives of Success Starter. Thanks and be assured of my esteemed regards. Au revoir.